Hello, hello. I am so excited to welcome you all into this conversation that I have been having with Eric. Just for a little context about who I am and who we are, I am Cassandra Quinn, and I am the programs chair of the Chicago chapter of Conscious Capitalism. And I am a part of the volunteer leadership team that helps really guide that chapter here in Chicago. And I'm also the owner-founder of Quinnovate, but here I'm having a conversation with Eric, who was with us last week. We had a live event, an in-person event at our meet and greet, and it was such an intriguing and important topic that I asked him if he would come and continue the conversation with me, broaden who was invited into that conversation. So before I steal all of Eric's thunder, though, I'll pass it to him so he can introduce himself.
Thank you. Yeah, my name is Eric Rieger. I am the founder of WEBIT Services. We are a managed IT, managed security, and software development firm in Naperville, Illinois. We will be celebrating 29 years in business next year, and we are an employee-owned company.
I love it. Thank you so much. And congratulations. That's such a huge milestone that you're about to hit. And I can't wait to dig into that. And before I do, though, just wherever you are catching this, whenever you are catching this, just drop a comment. If you're live with us now, say hey so that we know that you're here with us. If you're catching the replay later, let us know that you caught it later because we'd love to see who is in the conversation with us. And then before we get into continuing the conversation that Eric started for our chapter last week, I just want to invite anybody who is tuning in now to know that we actually have another in-person event this Friday. We have our leadership breakfast that is happening at Gibson's, and we have a phenomenal speaker that I'll tell you more about later. But if you are interested in these types of conscious conversations, I invite you to join us this Friday morning for our leadership breakfast. But right now we're going to focus on Eric and the conversation we started last week. So almost 30 years. Tell us a little bit about that journey.
Sure. Well, I was working for a software company back in the day, and we grew from 8 to about 80 people pretty quickly. When I joined, I was like the 8th person. And initially we were more like a family, and everybody just kind of pulled for one another. And then things started falling apart as we got bigger, and there was really no guiding principles or purpose behind it. And then it, became about money for certain people, and it just wasn't working out. And at some point, I had a conversation with my father. He's no longer with us, but he was my biggest inspiration for things because he was a truck driver for 50 years, and he tried a couple times to start businesses and failed miserably. And the interesting thing was, I told him, you've taught me more about business than anything else. This was kind of after I had gotten into it, because I learned what didn't work, so like paying attention, it was interesting watching him go through some of the struggles, because he never even graduated high school. So for him to just even get to the point where he started a business, and it grew a little bit before things kind of went off the rails. So having that as kind of inspiration, I had a conversation with him, and I said, I'm really miserable. I just really don't want to do what I'm doing anymore. He's like, well, you got a credit card, start a company. That was his philosophy. And I'm not recommending anybody who's watching, do not take that as advice. I was just too naive to know that's not good advice. And so I went in and gave my 2-week notice. And then I remember sitting in this very room I'm in right now going, oh God, now what? And so the whole thing started as more of a consultancy back in the day for web design and some back-end IT stuff. And some of the people I had done work for at the previous organization, they weren't supporting it, so they followed. All of a sudden I got clients. And then, probably a year and a half later, the company I worked for I had hired my first employee, who was my first hire over there, came over. And then they hired us back because they couldn't replace it. They hired us as consultants. So that kind of helped fund the growth and things like that. But along the way, one of the things that really kind of hit me hard initially was when I started getting involved in peer groups. everybody comes at you with like, what's your exit strategy? And when you're young and you're just trying to make payroll and trying to make it to tomorrow, you're not thinking about, exit. It's like, I don't know, I'll probably die. Like, that's my exit strategy. And people in the group are like, well, you shouldn't lead with that in any of your marketing efforts or any of your employee recruitment plans, because people don't want that uncertainty. You got to really figure this out. And then I started reading books and, Michael Gerber's stuff about E-Myth and building it with the end in mind. And I just could never wrap myself around the end. The end was always the part I struggled with, because it's like, well, if you enjoy what you do, why are you planning an end? And then the smart people were like, well, sometimes the end comes and it's not of your design, and you really do need a plan. And I'm not wired for that kind of thinking. But it was good. And then I had a coach in like 2015, 2016. His name's Doug Diamond. He's out of Philadelphia. He's a business coach. And he got me to read a book called The Great Game of Business, which is a story. It actually has its roots here in Illinois with the International Harvester Company that I remember driving by with my grandmother to pick my grandfather up from work. Like it really kind of hit home, the story. Them taking over, buying a segment of the business from International Harvester, and then it grew because they taught financial literacy to the employees. And I was like, well, that just makes sense, right? Because people come to work every day not wanting to do bad things. They just need to understand how business works. So we started doing financial literacy training. And then as I got involved with that community, it became more evident that more of the companies that do that actually wind up going employee owned. So then we went down that path, and it was a 6-year discovery journey to figure out what the best path forward in. And I'm still learning things to this day that might tweak what we're doing as we go.
Yeah. Oh my goodness. I think it's so important to highlight that, yeah, it's a dynamic journey. We're learning as we go. But what I picked up on was I don't think I even connected the dots last week when we were in person together, that it wasn't that you set out on this journey to answer the question of what is my legacy or what is my exit plan. It was I remember you saying, that's not where my head is. I'm trying to make payroll and make sure that I can take care of my clients today, right? But what I think I missed the nuance of, you just saw the value and importance of financial literacy for your team and how that was working in other companies. Am I understanding that right?
Yeah, when again, when you start your business and there's just one of you, you're doing everything. So you whether you're good at it or not, you're learning how finance works. You're learning, if you do something where there's inventory, you're learning how to order and inventory turns and purchasing and negotiating and selling and all, and then doing. So we wind up with all these hats on your head, and then you got to figure out how to get off the ones that you're not good at first and as quick as possible. But I'm like, okay, if I can figure this out and I understand it, it helps me do a better job. Well, why wouldn't that just be the case for everybody else? Here's how it works. And there are a very small minority of businesses that this gets turned off on because they're not consciously running their business, right? They're trying to hide things, and it's about, enriching just a few. And then that became my kind of personal banner for my life purpose. There's this income inequality gap in the United States. It's worldwide, but I really can't affect anything outside of, where I live and work. And I started thinking really a lot about the exit piece. And, I had so many opportunities to sell the company for 7 figures, and I could have been, retired years ago and, sitting on a beach and doing whatever. And that would drive me crazy. And I know within 3 months, I'd just start another business, or I'd start working towards, because I have to have a higher purpose that I'm working towards. And so the income inequality gap really tied into employee ownership, because the people who sell, and this is not a knock against people who've sold their business to private equity, but private equity is gobbling up a lot of things. They're buying houses, like they're starting up firms to buy houses. Like it's a scary proposition that next generation or the generation after might not ever even be able to own their house because they're all going to be owned by private equity groups.
Yep.
So I had a decision to make of do I just look out for myself and go, well, I'll be fine and my life will be great and it's somebody else's problem, or do I dive headfirst into this and go, okay, this is really where, if you really believe in something, now's the time to put up or shut up. And we went down this path, and it's like, this is just the start of it for us, because I want to be a beacon for other organizations to follow in the footsteps and see that, you have a path. You either can be part of that group that enriches a few and continues this gap, or you can start to maybe, less concentrate the wealth, spread it out, and give equity to the people who are actually helping create that value in the organization.
Yeah, I think that what I love that you just shared and you touched on, I'm going to throw this up as a little banner on the screen, is you hit two of our pillars, of our 4 pillars of conscious capitalism, right? And so one of them was higher purpose, right? And so recognizing that when we're doing business differently in this kind of way, we have to be having that as a driving force. And it sounded like you didn't know how to exist in the world in any other way, right? So tell me a little bit about how is having a business that is driven by higher purpose, how does that look different than maybe what people think about from like a traditional business model?
Well, it drives your decisions too. So, and again, out of context, sometimes I'm accused of being anti-capitalist, which is, part of why I'm in conscious capitalism, because you certainly have to make a profit to survive. So if you have a higher purpose, it still has to be funded. Like, you can't be a nonprofit in a for-profit world. Now the nonprofit segment, that's a whole other discussion. It's a whole other animal. But when we're talking about for-profit businesses, you still have to do the block and tackle. You have to be good at what you do. You have to deliver value, but that's not the primary reason, right? That's kind of the after effect of doing things for a bigger purpose. And when you get people joining in, there was a saying in the Great Game, it's really easy to stop one person, but it's really hard to stop 100 people. And so it's really about creating this movement where the business isn't existing just to do whatever they do. There's a bigger calling here, and that's really kind of when people ask, it's like, we're not just IT, security, and software development. And our software development division has taken that even one step further, is most of the stuff we develop is for the nonprofit space to help communities with the things that they need, and to really help empower nonprofits in a way that maybe they couldn't without the software that we create for them.
Mm-hmm. Yeah. And I think that, like, what I heard you saying earlier about your understanding of how just changing one piece, like the financial literacy, could have such a big ripple effect. And then I heard you say it's a global problem where there's this inequality gap that is widening, and you're like, this is a practical way that I can have an impact through the work that I do. So the why is like, I can't, like, is driving all of it. But what's really fun is when we get to connect the why, the how, the what, and people really understanding that through line, that it's not about just web services and developing IT. It is, we are affecting this really important global problem through the work that we're doing. It just happens to be that our way of doing it is through WEBIT, right? Am I understanding that correctly?
If we still have to be really good at the things that people pay us to do. So there's like, your purpose isn't going to save you if you're not good at the fundamentals, the day to day. So I mean, this doesn't change that in that respect, but it should, if it's executed correctly and everybody's bought in and believes it, it should attract the people who really want to be part, and then they're going to go that above and beyond. And then when you give them an ownership stake, it's like, okay, you're not working to make me rich. You're working for something bigger. And then as you create this value, we will share in the value that you create. So it really changes the mindset of like, how many people are just checked out on their day-to-day jobs, because there's really nobody there connecting the dots on why you do this. And a lot of companies don't have those dots.
Yeah.
So and I read somewhere recently, I think it was in the 1970s, the gap between the average worker and the CEO pay was like 30 times, which is, for the risk that you're taking and the things that CEOs do, that's not a huge gap from top to bottom, but it's like, I think it's like 4,000% higher. Like it's just gone super crazy. And you can't tell me in 40 years that CEOs have figured out the magic pill, like they're the ones doing all the value creation. It's you just absolutely can't do it by yourself.
Yeah.
So why is there such this disparity in growth between the CEO and the workers who are on the front line actually doing the work? I don't agree with that, and that's part of what we talk about. Is there shouldn't be that. I take a lot of risks and I steer the ship, and I got to make decisions that could change the course of the company, especially in IT. You're reinventing yourself all the time. AI is now going to be a disruptor. So there's a lot of pressure there, and there should be compensation equal to some of that risk, but not to the point of like I'm not going in and running the help desk or going out to clients and making sure their networks are working. So those people deserve a share of what they're creating as well.
Absolutely. And I think that leads right into what we've already been talking about, but to center us, and for those who are tuning in or maybe not as familiar with the pillars of conscious capitalism, we already talked about higher purpose. Everything that we've been discussing for the last several minutes is our stakeholder orientation. And I think that like traditional models, people think about, we're thinking about the bottom line, we're thinking about how are we being profitable, maybe for the owner, maybe other shareholders. But conscious capitalism is saying there's a lot more people at play, a lot more people being affected, a lot more entities being affected. And so really taking into account and creating these 360 wins with the stakeholder orientation and thinking about the business as a stakeholder too, right? You were talking about the nonprofit, versus being in a for-profit world. Yes, we have to think about the business as a stakeholder, and part of that needs to be driving revenue and driving profitability, but that can't be the only thing. And so tell me a little bit about like this journey then of saying, okay, being able to give people ownership, they're going to be bought more into the higher purpose. Tell us about that journey. What has that been like for you personally, taking your company on that path?
It's been a lot. And that's part of, I think, the challenge is there's only 270 employee-owned companies in Illinois and 6,900 in the United States. And I think there's a lot of perceived roadblocks, which are imaginary, and then there's a lot of real roadblocks depending on the structure of the company, the ownership, the desires, and again, your purpose. So for me, it was an easy path to decide to go down, but there was a lot of learning. We did 6 years worth of investigating, talking to, ESOP partners of people who are going to help us navigate all the things. And, you get so many different answers. It's like, okay, this shouldn't be that difficult. But we found a great partner that helped us get there, watched out for us, gave us good advice. And it's about, for me, when you're looking at stakeholders, there's no more important stakeholder than the employees, because without them, you don't have a business. Clients are like 1B. So like the employees are 1A. And because if you don't have clients, you can't pay the employees. So, there's a circle that has to happen, but you can't put them first. And you have to be really good at storytelling, because especially the people who are younger, and because this is a long-term play, like this is not an immediate, and I kind of tie this to Maslow's hierarchy of needs. If you remember that triangle, at the bottom of the pyramid is food, shelter, water. Like if you're not taking care of the basic needs, I don't care what your purpose is. If people feel like they can't eat and they can't live indoors, you're not going to connect with people. So you gotta balance this out, and you gotta be good at storytelling and reminding people of these things that we've done. One of the stories we have is there was a client we had years ago that we wound up parting ways with because they continuously abused our staff. And that was at the time $250,000 a year decision. And, we weren't at a spot where $250,000 is not a big deal. We're still not, like, $250,000 is a lot of money when you're looking at how many employees you can hire for that, or profit that you could pay out in profit sharing, all those things. But it was an easy decision because it's like, I can find clients that align with us easier than I can find employees that want to buy in, especially if you allow them to be abused. Then you're not living your purpose. So you have to, again, when we talk about orientation, for me, it's easy. It's they're at the top, and then everything else kind of falls in place right under that.
Yeah, thank you for that, like, visual. And I think that, like, even the other night when we were having these conversations in person, I think that there were, and you mentioned a moment ago, there's a lot of misunderstandings about employee-owned business models. What do you wish that people knew and better understood that is often misunderstood about this model?
Yeah, the cost is the first thing that comes up all the time. And what I found is, as we were looking for an ESOP advisor, the cost is all over the board. It's kind of like our industry with IT services. You can go in, you can bring 10 companies in, and you're going to be like, holy cow, how do I pick from this? Because the prices are all over the place. And so one of the things that came out from a conversation we had after the event was, a lot of the people who are talking about this from the ESOP advisor standpoint are like financial people who don't have stories to tell. They're just basically going through the bullet points. It's like a PowerPoint that nobody wants to watch. You ever had a bad speaker where, like, 5 minutes in, they're just robotically reading the bullet points? Well, that's what a lot of because they're not speakers. They're financial people, and they want to know the numbers, which is great. You need those people, but that shouldn't be the face of the movement. So a lot of times people look at this and it's like, what I heard was, well, this is just like a retirement plan, a 401k. Just pitch it that way to your employees. And it's like, well, if you do that, they're just going to ask questions. They're just going to, well, what's the point? You have to tie this to the purpose. So that's, I think, the employee-owned movement needs a lot more refined public speakers to give them the deeper why rather than the financial people. They can explain the plan setup and all, when the legal stuff has to be done, then you need those people in the room, but they shouldn't be out carrying the torch for this. And then the cost of it, for us, it costs us, I think, like $4 or $5 grand a year to maintain the plan, about 10 to 15 grand for the valuation that has to be done, because now you have stock and you have to value that stock once a year. And then it cost us about, I think, 70 grand to do the whole thing. Now, we had quotes up to $250,000 to get us started. So you can see how big of a gap that can be. And then and we're not a huge company, like we have just under 40 people. And at the time we were less than that. So, it's not a mature, even though it's been around a while, not many people have looked at it. But then, the tax advantages are, once you're 100% employee owned, you don't ever pay federal tax. So that money can then go into the retirement accounts, as it were, and like, instead of paying that to the government, or you can use it to, a competitive advantage, invest in other things to grow the business. So many opportunities you have with that, and then the government gets their money when people retire. So it's not like we're trying to steal from it's a legal plan. It just, there are advantages from a business growth standpoint that you could take advantage of. You still do have to have money set aside, so like you can't mismanage the money. The employee plan has to be funded, all those things. But there's a lot of advantages from a growth perspective and innovation that you could use that money to really fuel some change.
I love that. Have you started to see those benefits yet come to fruition for your company? I know that you're still, like you said, you're in that dynamic journey. You're still learning. So talk to us about, what are some of the successes, some of those tangible benefits that you've seen for your own company?
Yeah, we're still in our infancy, and what they tell you is, like, the first couple of years, because you get a valuation done beforehand. And that valuation, it came back, it surprised me, because because they always tell you you're not going to get what you would get on the open market, because if you have a strategic buyer, sometimes they could be willing to offer you 10 times what somebody else might. So this is really done actuary tables and just value. It's just a straight valuation. But I was surprised at what it came back at, and I was like, wow, that's more than I thought it would sell for on the open market. So that's good. And they're like, okay, well, once you take the debt on, though, it's going to negatively affect your share price for several years until that debt's paid off. So it's like you have to prep people for that, because when you come out and say, well, here's what our initial valuation was, and then next year it's like half. And it's like, well, what happened? It's like, well, you now have debt you never had. So there's an education process throughout the organization that you have to temper, that this is a long-term play. And, again, anybody who's looking at the get rich quick overnight, like those places, those opportunities don't exist in most part. So like, if you really want to put roots down, go for something that is connected to a purpose and then takes care of you in this route, and you do your part. In 20 years, when you could have just been working for another company and just been a number, maybe laid off, all that stuff, ESOP companies tend to do better even in tough times, because you have people pulling together, because they're pulling for themselves and their families. So I just wish more people would align that story of it's just not just a numbers thing. It's not just a financial thing. There's so much more that could be part of this story.
Yeah, and I think that this is connecting all the way back to the part of the conversation where you're like, financial literacy is key. If your team, if your employees don't have that financial literacy to understand all of those pieces, then all of that starts to crumble. Everything that you just said, right? And I know that you've used the term ESOP partner or advisor a few different times. And I just, for those who may not know what that means or what that looks like, and then you just use that in terms of the employee-owned business. So like just framing, helping people understand and connect those dots if they're new to this conversation.
Sure. Yeah, there are companies out there that's what they do, is they advise businesses on the path to employee ownership. And so they'll go through the legal structures, because like there's different considerations if you're a C Corp versus an S Corp versus, partnership or sole proprietor. There's different considerations to make there. So what they told us, the good one that we wound up working with, is you really want to be at least about 5 million in revenue, have about 20 employees, be debt-free or as close to debt-free as possible, and then pay your taxes, which I still didn't understand why they have to tell people to pay. Like, I guess that's not as common sense as you think, but they have to tell you that. And it's like, okay, well, that box we checked right away, because we always pay our taxes. The other ones we had to work to get towards to where we had them all. And that was the interesting thing, is that there were other companies that were willing to take us there even before we were ready, because they were just looking at it. So even in the ESOP community, not everybody's purpose driven, but the company, is it okay if I say who we worked with? I mean, is that allowed?
So. Yeah.
Yeah. So there's an organization out in California, Mankey and Associates, and they really took care of us, because when I had some questions, there was some kind of fear-based marketing going around. These new tax laws are going to go into effect. If you think about it, you better do it now. And all the other places we were talking to were like, yeah, we really need to get you on the books this year. You really should go. And they went, why is that even a thing? You're going to take a seller's note, so you're not getting paid for 5 years anyways. So when these tax things take effect, it's going to affect when you are getting paid out. So what difference does it make? And I was like, geez, that's like I didn't even, again, common sense. I didn't even think about that. But that's what purpose does when you're a purpose-driven company. They weren't looking at us as like, I got a quota, I gotta put them in. They're ready. He's ready to go. They're like, no, you should hit these marks first and set yourself up for long-term success. Because if you overburden the company with debt, like if you go 100% and then you use a bank and then you got to pay that back and you hit tough times, that could ruin everything. It could wipe the dream out. So having an advisor that's really kind of aligned with, they don't necessarily have to buy into your purpose, but the fact that they believe that your purpose is and then they're your partner in achieving that was a big deal for us. And there's some out there that are very well known that they didn't care. They just wanted to see how much they could charge and how quickly they could get us there, which is really short-term thinking, because like we still have more transactions to do with them. So it's like it's in their best interest that we're around for a while, and the employees' interest that we're around for a while. You went dark. I can't hear you.
Sorry about that. Thank you. The joys of technology. So I'm so glad that you brought up those kind of baseline bench marks that the organization that you ended up working with talked you through, so that people can go, am I ready for this? Am I not? I remember you saying like they let you know you should wait, you're not ready. What were some of the things that you had to do from a practical, tangible, tactical kind of sense to get yourself ready? What was that journey like?
Yeah, the strategic part was more like the debt, making sure we were debt free and in a good cash position. So it wasn't even so much just because we were never really financially irresponsible, but you want to be as close to debt free or debt free as possible, and then build up some cash reserves to just insulate yourself from that. So we created some structure in the company to work towards that, and then growing the revenue base to the point where we checked all four of the boxes. So it was really strategic from that perspective.
Yeah, and I remember you saying that like those who are helping guide companies through this are not necessarily the best to be the face of this message, the face of this change. This feels like something that is very important to you, and that you are championing and desire to be a voice that is creating this change in the world. What was that like? Were you the one that was painting this picture and taking your employees on this journey and getting their buy-in? Or what was that like to get employee buy-in for this transition?
Yeah, well, we talked about this, where when you are kind of like I am with that visionary title, you drive a lot of people crazy. So I've had a lot of ideas in the almost 30 years of running this place. So when people tend to see some stops and starts and some things, because visionaries can get distracted and then they lose interest in things, yeah, I think there was a bit of a wait and see at the beginning. And when we first started with the financial literacy piece, even before employee ownership, that was a big, like I just said, let's just open the books and show everybody. And they're like, well, you need to teach your leadership team first. That it goes back to that conscious leadership, building that layer, and then have some teaching moments for the rest of the staff. And they said, be prepared to lose like 10 to 20% of your staff, because once you have this accountability and transparency, the people who have been hiding or don't desire to work in a place where there is accountability and transparency are going to leave. The good news is it will then attract people who want that, which raises the level of that throughout the organization. So we did exactly as it happened. We lost some people, but we gained some people along the way. And it's really important, because one of the first things that I remember in the first meeting is we talked about how an S corp is structured from a tax perspective. Is the company technically doesn't pay tax, it passes through to the owners tax returns, and then you get whacked that way. And so the better you do, it's like when you see all these politicians talking about let's tax the millionaires, and they just passed something this year in Illinois now. Any S corp out there that's making good money on profit, and then that passes through there, they're going to get taxed at a higher rate. And so I remember one of our employees at the time standing up and saying, wait a minute, you pay that tax, you got to take money out of the company to pay it, but you don't get any of that profit? And I said, no. And he goes, that's some. And then he started swearing, and I'm like, yeah, welcome to ownership. Like this, the stuff that you go through that people don't realize the structure. So we had to start at the foundation, fundamental. What's a balance sheet? What's a P&L statement? And people still struggle with that today. It's not an easy thing when that's not your area of expertise. Now you bring the finance people in the room and they're just rolling their eyes like this is 101. But if you don't start at that spot, it's really hard to get buy-in, because then people get confused, or especially in IT, they're socially awkward. And I carry the standard for that too. They don't like raising their hand to be wrong. And so if you don't foster that environment of it's okay to ask what other people would think is dumb questions, because there's no such thing as a dumb question. let's get it out there. And if there's people who've been here and heard it before, great. But the new people need to be indoctrinated into this to understand. And, that tends to take time for that to build and grow.
Yeah, I think that the key that I really want people to tune into is that like you understood getting the buy-in of your leadership, how foundational that was, and that leaders go first, right? And so you as the founder, you were the very first, and then getting the buy-in and the understanding for your leadership. And like you said, I love that you're just naturally taking us through the pillars of conscious capitalism. We didn't even plan this, y'all. We did not plan this. It's just naturally happening, but conscious leadership. And I think that this is a great time just to remind people that if you're able to join us this Friday, November 15th, if you're catching this in time, we are going to be having another conscious capitalist conversation. Wow, that was a tongue twister. At our leadership breakfast with Christine Sandman Stone. She's an author and a thought leader in this space of conscious leadership. So she's the author of The Modern Management Mentor, the next tools for new managers, and really being able to help us reshape organizations from that conscious leadership space. So if that's a conversation that you're interested in continuing, come join us this Friday. And when we wrap up our live, I'll make sure to go to the places and drop the event link so you can register. So once this live is over, you'll be able to find that in the comments section. But going back to the conversation we're having here with Eric, I want to go back to this idea of getting the leaders bought in. But now you have, am I remembering right that you have somebody who's in their first stage of being like fully vested, or like, tell me, you hit some kind of milestone recently. What was that milestone?
Yeah, so the way the structure works is you have to be here 6 years to be vested. So last year when was the first year we actually handed out physical shares, like the copies, so we had a big party and we handed them out. So we had several employees that are 100% vested in it. And, our goal is to be 100% employee owned by 2030. So, again, we're not quite 100% owned yet because you have to manage the debt load. But that was a big event to actually be in person and to give people the share books. And it's like now every year they're going to get a new share statement. They can pin it in that book and have a keepsake of watching their work grow. And it's basically free money because they don't have to buy in. That's the other kind of misnomer, is that there are plans that aren't quite what I would call the traditional employee owned, where you can have people buy in, and that's how you raise some of the money to buy the other owners out. But that's really just kind of an ownership transfer. This is the trust forever owns the shares, and the employees get issued shares from the trust, and they can only sell them back to the trust when they leave. So having people 100% vested is, again, that's the thing as you're arcing through this growth. The longer people are there and the better you're doing. It's like every year you're watching your share price go up, and you're getting more shares every year. So it's like Christmas all the time.
I love it. And I think that that's such an interesting and important point, that it's not that people are it's not the transference of ownership in the traditional sense that they're going to go sell it to anybody. It is literally, it is theirs, or it belongs to the trust. And so it creates, and I think, I'll just be really honest, I don't think I had heard the term, or it stuck in a new way if I had, this idea of an evergreen business because of that model. Can you talk to us a little bit about what evergreen business means for you?
Yeah. So, 100 years from now, what we're doing, I have no idea, because at the rate technology changes, like I don't even know if it'll be, Android owned or employee owned if robots take over. But you really want to set that framework of why we do things is more important than what we do. Now, obviously, technology is the area that we have the expertise. But as that evolves and changes, we don't want to limit that part as long as it aligns with the why. So to get this to be evergreen, you have to have that purpose going first, because again, I know it came up in the conversation that there are now some private equity that are conscious businesses, and I have thoughts on that, but we'll do another live sometime for that. But for the most part, private equity is driven by money. Like it's literally the return on money, return for the shareholders, and that's it. That's all they care about. And a lot of good companies get destroyed in the process. So, you could have a family business, 2, 3 generations, private equity, and then all of a sudden it just disappears in 10 years. So we're trying to make this generational, and that ties into the income inequality gap. Is generational wealth is part of that solution to the problem, and you can't just make one group of owners rich or better off, because that's not going to carry into the next generation. You want to make this a perpetual motion machine, as it were, that just lasts for as long as you have good leadership.
Yeah, and I think that understanding of the long-term trajectory, it's not just about now or just the next generation. You have that vision for generations to come, right?
Yeah.
And recognizing it doesn't just stop with the next generation, but how are we setting up every generation to be better off than the one before? And I think that ties nicely to your title that you have currently within your company. Can you share about that? And then I'll also just dual up a question for you. What is something, I've been asking all the questions because I'm excited and I want to know, but what is something that you wish people would ask you that they don't, that you want us to know about this topic?
Sure. Well, the term we were talking about that I put on my business cards is interim vision guardian. And it's there for a couple of reasons. One is the interim reminds me everything's temporary, and you have to keep that first and foremost, especially if you're trying to build an evergreen organization. So everything's temporary. The vision guardian part is really to remind me that that's anybody who's in that seat, call it CEO, call it whatever you want, like that's your primary purpose. Is you have to guard the vision you have to make sure it's still relevant as things change. Like the what part can be flexible, but the why, the North Star has to be there, and it's your job to protect that at all costs. So there's that. And then I just wish people would ask me more questions about the employee ownership. I think there's a stigma around it, and it's a lot of self-discovery work. Like this didn't just happen overnight. I spent, I don't know how many weeks and months pondering the meaning of all of the stuff, why we do what we do. And you really, sometimes it comes down to where you're going to have to make a lot of changes functionally. And I don't know if people are prepared to do that in all cases. And so asking me questions about what that journey was like, taking a 2-hour flight back from a meeting, crying the whole way home because you realized you were living somebody else's dream. And it's hard to just stop and go, okay, full stop, we're making a change. I'm not living this person's dream anymore. What's my dream? That's a big question to ask yourself. And then to wake up and realize you weren't even living your own, you were fooling yourself on it. So just questions like that about what that process is like, because this is not an easy shift to make overnight. So there's a lot that goes into it, and I'm always happy to go down that path as needed.
I love it. I love that you're being this beacon for this conversation, for this shift in how we do business. And I love that we understand your purpose. I want to make sure that from a practical standpoint, though, who do you love working with from the business standpoint? Like, who does WEBIT work with? What do you love doing? How can people connect with you around that if they're interested in just the services that you provide too?
Sure. Well, I think you guys have connected my LinkedIn to some of these things, so you can easily find me and connect with me on LinkedIn. We've got an email, hello@webitservices.com. That definitely gets to me in one way or another. And as far as the businesses, there are certain markets that we tend to gravitate towards more, like the nonprofit space, the library space, just because those are community pillar type organizations, and they, the purpose and the mission, and that's all just kind of inherent. But really any business that is on this path where it's really, there's a bigger picture, and they're contributing in some meaningful way to humanity. Like, we would love to even if we don't work together, just get to know you and have you in our circle. Because the more of us there are, the quicker this whole thing spreads, and then that's how you really, get a movement going off the ground.
I love it. I love that, like, you're just oriented on community in such a way that regardless of whether you work together in some kind of formal way, just growing that consciousness and that collective consciousness around these conversations. The last question I have for you, I know we're up against our time, is so you have been, your company has been a corporate partner with Conscious Capitalism for around 3 years. What made you decide to become a partner, and what benefits have you seen from that partnership?
Yeah, it was when I found out about it. Again, you're kind of one of the best kept secrets in business. Like, again, just getting my eyes on things. It's the same thing with The Great Game of Business. Like, I'd never read the book. It'd been out for 25 years. And, they even asked me, like, well, what do you think we need to do to get more visibility? So as soon as I saw it and started reading, the 4 pillars, I'm like, just going, okay, these are my people. It was a no-brainer to, you want to hitch your wagon to that, because it's like, that's how movements get going. And it was so easy from that perspective. And the benefits are meeting other people in the community who are of that same ilk. And, that's how we grow this thing, is by connecting with people who are purpose driven. So, when there's a community like that, like, we raise our hand, want to get in right away.
I love it. And we're so glad that you're here. And I know we have to wrap up here, but your journey of your why of being a part of the chapter is same as mine. That's why I went to my very first meeting and then found the leader of our leadership team and said, how do I get involved? And then I ended up volunteering right away. So I think that there's so many cool ways to get involved in the chapter, and I'm glad that you're a part of it. I know that you're going to be traveling towards the end of this week, so you won't be with us in person on Friday for our leadership breakfast, but we're excited to be in the room with you again in person sometime soon. And also, like you said, these conversations can be continuing in all kinds of ways, online, synchronously, asynchronously. I love that you already said that we could do another live and have another deep dive conversation. And so I'm excited again to continue the conversation. Again, if those who are tuning in now, you're invited. If you're catching this before our event on Friday, November 15th, join us in person for our leadership breakfast. And otherwise, thank you so much, Eric. It has been such a pleasure to spend some time with you one-on-one and really open conversation. I realized that we invited a lot of people in, but I got to hog the mic. So thank you so much.
It was my pleasure. Thank you for having me.
All right. Thanks, everybody.